Oil prices have plunged by as much as 12% to settle around $108 a barrel after rising to more than $130 a barrel earlier this week. The drop came after U.S. Secretary of State Antony Blinken announced that the United Arab Emirates and Iraq have agreed to increase oil production. Washington has been calling on major oil exporters to raise output to rein in rising prices and make up for a fall in global supplies following its ban on Russian exports of fossil fuels.
There is, I think, a significant not only opportunity but imperative in this moment to finally move off of, for many countries in Europe, a dependence on Russian energy.
For more on this now, let's go to Naeem Aslam in London. He's Chief Market Analyst at AvaTrade. Many thanks for being with us this morning.
Thank you for having me.
So, Naeem, do you think that with the International Energy Agency helping Iraq and the UAE, and I'm thinking potentially Saudi Arabia, helping, this problem could be settled somehow? And I mean, oil prices could return to normal?
Look, there is a probability of that happening, but what is important is to look at the spare capacity that these countries are operating on. And that spare margin or capacity isn't mammoth to fill the vacuum which is created by the sanctions imposed by the US on Russian import oil, on Russian oil sector. So we think that, yes, there could be a relief, but we're a long way from that, because we know one thing for sure, that OPEC and the members of OPEC don't agree on anything that easily. There's constant back and forth communication with them and a lot of noise between that period.
Right, so you're hinting at the sanctions and potentially a post-pandemic period, and all things considered, what is a price that, according to you, would balance supply with demand for oil prices at this point in time?
I think if we take out the current Ukrainian war situation, the sanction situation, and things sort of comes back to normality, the supply is more than ample enough to really balance demand. Why? Because the long-term view when it comes to fossil fuel isn't really that bullish among investors or even traders. So we will look at a price range of between 40 to maximum on the top side is $60. And that particular price target is only going to continue to move to the downside as we continue to see more investment in the renewable energy sector.
So we've seen the United Kingdom, the US announcing their own restrictions on buying Russian oil imports. Can we think that Europe would be able to do the same given the level of dependency? I mean, some countries in Europe we've seen depend on Russia for more than 80% of their energy imports. Can Europe do something similar, in your opinion?
That will be incredibly difficult. Gas prices over here in Europe and in the UK, they are already through the roof. They have no other alternative. And as you correctly mentioned, 80% of their supply is coming from Russia. And hence, we haven't seen any sanctions. They are aiming to put sanctions on Russia on the back of what is happening in Ukraine. But they just really can't do that because in the short term to medium term, there is no other solution.
Naeem Aslam, many thanks for this analysis.